Okay, thank you, everyone. The next two items are action items. The first is item 5 is the private equity policy revision, second reading. And we have our representatives from Makita here, as well as Margot Worth and Rob Ross, and PCA Neil Rue. Margot?
Thank you, Harry. Margot Worth, Director of Private Equity. Rob Ross is a portfolio manager in our group. This is a second read for a set of private equity policy revisions that were presented in July. I only have two charts. One chart is a quick review of what we presented in July. Four main themes. The revisions were somewhat extensive. It's been a long time since we've done an extensive rewrite or update of the policy. The first item, and probably the most substantive, is the delegation limits. They had not been adjusted since 2006. And so basically the portfolio has grown 50% in size, so we've upped our delegation limits by approximately 50% for partnerships. More for co-investments, just representing what's going on in the industry, as that's become a much more prominent part of the industry. The second major area was secondary markets policy expansion. I made a comment back in July that this was probably the most out of date because the industry has changed the most in this area. The secondary markets, where we're buying assets and partnership interest from other LPs. We're not getting in at the very beginning of the partnerships, that this sector of the industry has changed the most. So the old policy was written when we anticipated buying single partnership secondaries. The way the industry works now is people buy portfolios, they buy mixed portfolios, portfolios with partnerships, maybe mixed with co-investments, maybe mixed with direct investments in portfolio companies. And so there's an extensive rewrite there to bring us up to date with current industry practice. Co-investment policy update. One of the things we've added is a provision for a co-investment advisor. The concept there is to give us, let us work with a firm, and what we intend to do is have a firm work with our smaller partners and to source and close co-investments that would otherwise fall through the cracks. That with a staff our size and a portfolio our size, that it would be really hard for us to find and close these smaller co-invest. So we've set up a provision for what we're calling a co-investment advisor. There's also a provision there for us to pay what are called broken deal costs. And that's a little bit complicated. I'll go into that if somebody wants, but I think it's relatively minor in the big scheme of things. And then we also, in June, before this first reading on this, had done some benchmark revisions. In July, we did some adjustments to what had been discussed in June related to the benchmark. So that's what we covered in July. And on the next chart, here are some changes we've made since the first reading. I mentioned that we want to be able to do diversified portfolios of secondary assets. And so one of the things when we updated the policy that we wanted to do was we wanted to have the same level of authority to do secondary deals as we do primary. Often there's a discount on secondary deals, and you know, it's a way to get money out quicker, and given where we are on our asset allocation and we're behind, we thought for multiple reasons it made sense to do that. And so when there's a diversified portfolio, we're getting an already bigger chunk of the to add into the portfolio. And so we thought that there should be additional delegated authority for diversified portfolios. But questions arose as to how we were defining diversified. And so I'm just going to leave it, again, unless somebody wants more detail, to say that we took the suggestions from June, and I'm sorry, from July, and added those into the version that's in front of you right now.
Before you continue, Margot, Ms. Dillon, you have a...
No, I'll wait till after.
You'll wait till the end, thank you.
Okay. We had further clarifications on the benchmark from the last version. Now it's made more explicit, because we said we were going to, if you remember the customization, where we're going to use the benchmark, but as tends to be common in the industry, we're going to adjust the benchmark to reflect the characteristics of our portfolio better. But what we said specifically is the customization with respect to vintage year pacing is going to be based on our actual, but the customization with respect to the sub-asset targets, in other words, the venture capital, debt, and buyout portions, are going to be based on our targets rather than actual. So that's now in the policy. And then, Harry, you asked that we report back to how these are going. And we actually didn't put that into the policy because we thought that would end up being something that would eventually become null. So we have added it in the language for the item, even though it's not in the policy. But would report back a couple of years and discuss every year for at least 2 years and report back on how we've used the new policy, where it's come into play, where we've done bigger deals than we would have been able to do otherwise under policy and such.
People are looking to weigh in, but I'm going to allow you to finish the report, so just be consistent. I'll be consistent with my colleagues, and so finish the report, then we'll get to questions, okay?
Harry, I'm done.
I like that. I like that synergy. I like how that. I like that. That feels about right. That's great. Ms. Dillon.
Good morning, Margot.
Hi.
First of all, I wanted to say thank you for spending so much time with me on Monday, educating me a little bit more about the policy and answering kind of the wonky questions that I asked. But as you both know, I still have some questions. So, Chris, I think the first one's actually going to go to you. So if you look on page IMV 28, in the middle of the page, we have a paragraph that talks about the investments being performed by, who they're monitored by, who they're performed by, who the officers operate under, who the private equity board consultant reports to, and then the reporting of it. But right in the middle of that paragraph is the information about ESG and our 21 risk factors. And it just seemed like that was a really strange place for it. And I don't know why I picked it up this time and not have picked it up in the past, because it's not like it's new language to the policy at all. So I'm thinking that the private equity probably isn't the only policy we have this in. And I'd like, and, depending on how the other board members feel about it, it seems like we're passionate enough about it that it could stand as a separate paragraph. And so if we could just kind of go back and see where we're sticking ESG in our policies. Sure. Because it really just doesn't belong in the whole management part of it. And that whole paragraph's about management and reporting and monitoring, so.
Those sentences, actually, at your suggestion, was adopted, but Michelle Cunningham led the effort. It's in every single policy.
Right.
And what we can do is look at whether it's part of a subparagraph or make it its own paragraph. And, obviously we're trying to work on revising those 21 risk factors in the ESG policy. So depending on what we do there, I think we can come back to you with a comprehensive change to all of them at once.
That would be great, because I think that would probably be the most appropriate way to tackle it. And then, Brian, I think my next question is going to go to your shop. We're on IMV 36. And when I asked Margot about it, she said this was the recommendation coming out of legal, and so it's on letter C.
I would just like to say, after I told you that, not necessarily our legal, but other law firms. have-
Oh, got it,
we've
got it,
had-
got it, got
We've
it.
had numerous discussions about that. That was the
Okay,
only point I
so the
wanted to
whole,
make.
the numerous discussions about it is having a series of three, and you're gonna pick the lesser of one of those three, and it has and instead of or. And I get, what Margot and I kind of talked about is that it has to meet all three of those tests, that's why it's and. Is that?
Tw- 22C would be an example where it says the maximum amount is the smallest of A, B, and, or 1, 2, and 3.3.
Right.
Should be or, grammatically it should be.
Okay.
That's, for me, the connotation
Yeah.
of having and is, it's got to meet all three of these, but they're so disparate that I think it should be or also.
Yeah.
Okay.
That goes with the smallest, so.
Okay, thank you. And then the last comment I have is on, it's towards the end of the policy, so let me. I guess we're in the glossary, maybe. So,
Dana,
On
I think it was
page,
the definition of partnership.
48. Yeah, I'll go back to the whole definition. On IMV 48, private equity special mandates, it says that strategies suggested by board members, I'd like to change that to investment committee members. Or the investment committee. It shouldn't be, I'm thinking it shouldn't be individual members of the committee, but it should be the investment committee. Does that make sense? And then the last one would be the definition of first-time limited partnerships. We're defining it by what it isn't instead of by what it is. And my question to the committee is, are we, as a committee, okay by defining it by what it's not instead of what it is? So I'm asking my colleagues on that.
We think we can make that better
Thank you.
with a different sentence.
Seems like it would be good to focus on what it is. That's interesting.
We concede.
Anything else, Dana?
Nope, that does me.
Thank you, Dana.
Margot knows we still got stuff to work on, but we're good on that.
Paul, you
Right,
want to
Margot?
jump back in the
That's
queue? You're good? Okay. Seeing no one else in the queue, it's an action item on INV 26, which is a recommendation to adopt the policy changes. Entertain a motion?
Move approval.
Second.
Moved and properly second. Any objection? Seeing no objection, it passes. Thank you.
Thank you.
I just want to clarify that motion was to approve as
As
amended.
amended.
As amended, yeah, as amended. I'm sure Mr. King has those amendments.
Of course.
We got it.
Yep,
Thank you again, Rob, Margot, I really appreciate it.
thank you.
So that means the issue of clearing up.
Item
that-
6 is
that
the
first
corporate
time
governance
given
engagement plan. Ms. Sheehan and her team are coming up. This is an action item as well, and I know that we'll have some time in closed session to talk, maybe some specifics in closed session, but this is the high-level overview of what I think is an excellent engagement plan and a great report. So Ms. Sheehan, turn it over to you.
Anyway, I feel like I'm at the card table.
Do you sit at card tables?
I can see it, little visor.
I know it doesn't. There we go. Yikes. Sorry. So Ann, it's like, ooh. Ann Sheehan, Director of Corporate Governance, and I've got Aisha Mustagni and Brian Rice, Portfolio Manager in our unit with me. So this is the engagement plan for the next proxy season. But I thought before I go into that, I'd bring you up on some of the stuff we've been doing this past year and since we've met previously on that. So So I'll go a little bit in that, and then we'll go into the engagement plan. And Mr. Keeler, you are right. In closed session, we will be handing out a list of the companies that we're going to be specifically engaging. As you're aware, it's been our policy that we don't name the companies while we're still engaging or sending letters. If we end up going to a shareholder proposal or the engagement becomes public, then at that time. But it's our preference to engage with them confidentially before we make the names public, and sometimes we don't make them public at all. So you will hear the companies that we're talking to in closed session. So just a little bit on this past proxy season and these past 6 months have been busy for us. We continue to get lots of incoming calls for engagements with companies. And in fact, this past year, we responded to over 70 companies that requested engagement with CalSTRS. And these calls and/or meetings, they can be both, with the companies include a variety of topics. They can be environmental issues, sustainability issues, compensation, governance, board composition, including diversity and human capital management, which, as you know, is a big issue for us now, and we'll talk a little bit about that. And then just general governance issues. The other thing I thought I'd bring the investment committee up to speed is we are actually procuring a tracking mechanism. We're in negotiations now to develop a tracking mechanism because we have such a track record now of how many times we've engaged with companies, what issues we've talked to them about, what changes, and it's helpful for staff to develop this tracking mechanism. So when a company calls, we can monitor what we've done, go back and say, okay, we talked to you about this 2 years ago, we wanted you to do this. So hopefully by the time of the upcoming proxy season in the first quarter of 2018, we will have that up and running. So we're very excited about that. As you know, annually we post a report, summary of our proxy votes. We just posted that report online, so it's available for you to look at. And it gives you a sense of how we voted this year, the numbers, and kind of some historic perspective of our proxy votes. And those are all of our proxy votes, U.S. and non-U.S. One of the issues that's been a big topic for not just CalSTRS this year, but for a number of investors, and that is a kind of a campaign against no-vote shares. When Snap announced in February that it was launching an IPO with a share structure that offered public investors no voting rights in their stock, it sort of put most investors kind of over the top. We have dealt with a lot of dual-class structures where we get maybe half the voting rights, but this was one where we got no voting rights whatsoever. So staff has responded to a number of inquiries on this, including a number of consultations with the index providers. FTSE Russell has barred companies with less than 25% of the float in non-voting shares. S&P has banned any new multi-class companies from their index that don't have voting rights. Facebook has dropped, actually, they just recently settled a lawsuit that they dropped their new non-voting rights shares as a result of litigation. And then Uber has also revoked their company's super voting rights. I think Uber's had a lot of issues going on, and this was one of them that they also had taken action on. So I think this is an issue that investors continue to be concerned about. We coordinate, obviously, with June's group because of Global Equity having such a broad holding, and coordinate with them on any time we file comments. But it's been one that has taken up a lot of time for investors this past year. Staff continues to get requests to speak at a variety of events. I think as Sharon and Harry know, as we've been out on the road, the staff is very popular. STRS has a good reputation in this area, and so we get asked sometimes too much to get out on the road and speak about what we're doing. But I think it reflects well on the good work that staff is doing on this. In terms of sustainability, and Brian can go into a little more detail if you like, we actually just completed our interviews on the ESG managers, the new ESG managers. We completed an alternative selection process, what's called an ASP, for both U.S. and non-U.S. public equity ESG strategy. We evaluated, or shall I say Brian and Travis, and the consultants spent a lot of work evaluating 110 firms with 219 different products. We conducted 2 due diligence questionnaire processes, and then, as I say, we just completed the interview on 8 managers with 9 strategies. We had a manager who had 2 different strategies that we looked at. And we can answer a few more questions in closed sessions about specifics on those, if you like. But we hope to make a decision sometime in the next few weeks about which ones that we will be funding. We also have refreshed and updated our Green Team report, which is complete, going through the finishing processes right now with our communications staff, and it should be posted online in early November. So I can send you all a link when the Green Team report is completed and published. We made some big changes in the redesign, including a focus on asset class-specific environmental risk integration methods, how they're integrating ESG into their asset class and some of the decisions that they're making. One of the specific engagements I wanted to talk a little bit about is Energy Transfer Partners, who, as you know, was the lead on the Dakota Access Pipeline. And so staff went down and traveled and met with them in Texas, sort of toured their facilities, talked about how they do the operation. We engaged with them on human capital, emergency preparedness, sort of their license to operate, how they deal with outside constituency groups as they go in and plan a pipeline and site a pipeline, and several other kind of risk scenarios for the operation of the pipeline. We also have been, through the Dakota Access Pipeline discussions, engaging and will continue to engage the banks that are helping to finance these pipelines and their compliance with the Equator Principles, which are principles that have developed a number of years ago through the UN about how they treat indigenous peoples as you go into some of the geographic areas where you may need to site these pipelines. So we can certainly report back to the board as we continue those discussions. As I say, Brian and Travis, who have the lead, as you know, on our sustainability, have done a number of speaking events out with institutional investors and portfolio companies on all of our issues: climate change, ESG disclosure, energy efficiency, methane, some of the things that we've been engaging on for a while. We also have been cooperating with Ceres, PRI, and others. And we will be joining, as the Controller's Office had asked me this morning, the Climate Action 100+, which is this large group of institutional investors who will be engaging 100+ companies through an umbrella of a variety of organizations. And it complements as we get into our own TCFD climate change effort that we're going to be doing over the next 5 years. There's a lot of overlap in those companies. A few other things that we've been doing. Private prisons continues to be an issue that many people are interested and concerned about. We continue to engage with them. There have been a number of press stories recently about some of their operations, so we will be sending a new letter to the companies and having some discussions with them about their operations. Iran and Sudan, as you know, the president has sent to Congress his desire to pull out of the Iran nuclear deal. So with many European companies interested perhaps in going back into Iran after the nuclear deal was signed, we will be engaging with those companies as soon as we sort of get a feel of what the U.S. Congress is going to do. I don't think anybody anticipates sanctions going back in, but we'll have to wait and see. Philip and I were in Washington, D.C. a few weeks ago and met with Treasury Department, the Office of Foreign Assistance Compliance, who really has the oversight over the JCPOA and how the U.S. government will be handling that. So we'll keep you posted on that. And then finally, before we go into the engagement plan, we're very active with the regulatory agencies. There's been an effort by some of the business communities, both legislatively and regulatorily, to roll back our ability to file shareholder proposals at companies to, I won't get into the details, but to amend what's called the 14A8 process under the securities laws, which would limit our ability to file shareholder proposals. We have been very active both with congressional members as well as with the SEC in explaining why this is such a beneficial process to the shareholders. We are hopeful that the SEC will not open the rulemaking. We have met a number of times, both with other shareholders and then also in my capacity at the SEC, the Investor Advisory Committee there, talking to the chair of the commission about the benefit of the shareholder proposal and the engagement that we have with companies. So we're hopeful that they won't reopen the rule. The other issue that we have communicated with Congress about on a number of occasions is the regulation of proxy advisors. and continue to explain the benefit of proxy advisors and the research that they provide to us. And we will continue to communicate both with Congress and again, the SEC on our concern about that. We also engage with the Public Company Accounting Oversight Board, the PCAOB, and some of their new rules on oversight of auditors and auditing report. Obviously, audited financials are a critical issue for us as we assess companies and capital allocation, executive comp, and other issues. So we stay in close touch with the PCAOB. So unless you have any questions on our, what we've been doing recently, I can go into briefly the engagement plan for the upcoming season.
Why don't you hold right there for a
Sure.
second, Ms. Sheehan, see if my colleagues, Ms. Dillon?
So Anna, as you were talking about the engagements that we've been involved in recently, and I can't keep notes as fast as you're telling me about them, let alone remember
I can
what you
send you
told me
my
about.
notes.
So if there was a way that you could, it just kind of dawned on me, if you could just give us a quick report, we don't need to have a full report, but if you could give us pretty much what you just said, with some bullet points. So like when you were talking about the North Dakota pipeline, we know that we have members that are very concerned about that. It's been brought, to our attention a couple times. If the specifics you gave, I'm not going to remember that.
Sure.
If we could just get quick bullet
Yeah.
points. And I guess I started to think about how Brian keeps us updated on the progress of litigation. So the matrix that he has for that, if something could be done similar to that, so that we would have some specifics that we could meet, or we could talk about, have with us, kind of arm ourselves when we are out and about talking with our constituencies
Sure.
and our members, what it is exactly what we're doing and
Yeah.
the types of engagement we're doing.
Absolutely. And I can look to see, in terms of the format he uses, and we could send something out once a month or something in
That would be
terms of what's
terrific.
being done.
Thank
Okay.
you.
Sounds great. Great suggestion.
Ms. Hendricks?
That's a great suggestion, Dana. I just think more and more now, it's just, I'm trying to keep track of all the things you're saying and then all the things I'm reading about and that I'm getting asked about. And my first question is, how do you guys, how do we decide what to focus on in terms of what really matter? I mean, because at the end of the day, we're fiduciaries of the fund, what really matters to the bottom line of our fund, because there's so much going on. That's just a question for us to kind of contemplate, but, and your staff have figuring that out. But the other question I had was, how, sort of in light of Dana's comments, how do we, and maybe Geraldine is in the room too, like how do we communicate the work that you guys are doing to our members? Because I know you mentioned the Green Team report will be like on the website, but I'm thinking more and more now, and we obviously have more activism from our members. We have more, members of the public coming to engage with us here physically, but we also are getting lots of letters and phone calls and things like that. Is there a way, and if we need more staff or support to help that happen, I think the communication side of our, of who we are now is amping up because of, some of these issues that are happening around the globe. And I just wonder if there's ways we can communicate with our members more proactively instead of just having things on our website, but actually sending out, I don't know how, I know we send out retirement reports and things like that, but I just think the work that Anna and her team is doing is so important, but I also think members are reading the paper, they're listening to the news, and I think everyone has a heightened sense of, how do we help change the world? And I think if CalSTRS is helping in that way, in some way, it would be great for our members to hear it. So
Before I turn it over to you, this might be helpful, and then we'll kind of move back into the engagement plan going forward. I think what we're talking about is maybe a one-pager, looking at Mr. Boykin, Ms. Jimenez, yourself. I could envision something along the lines, agents of change, your CalSTRS, effectuating positive change in corporate America, executive comp,
right.
environmental
5
risk,
bullet points with links, maybe?
diversity in the boardroom.
Yeah.
And it's just a real high level, almost like keep it simple approach to educate the members of the system as to the great work that you're doing, and working with, the communications teams to do it, and then we can push it out to lots of people that are interested, that probably would alleviate, help all of us. Yeah.
Yeah, no, we'd be happy to come up with something
Yeah.
because we sit right close to Geraldine and Sarah, so we have lots of discussions about the things that are going on. So it makes it easy in terms of sort of doing a regular reporting that we could give them the information, put it in, the format that's best to communicate to the members
Right.
and to the constituency groups, and then figure out, post it or to push it out, or, how to do it.
And I want to make it clear, I want to free up your staff to do all the good work you're doing. So that's why I'm looking at Geraldine and other folks, because you guys need to do your thing. But if we can think about that and maybe.
Real quick, and we have been, because we definitely have heard the requests that we want to know more. So we did create a couple pager, but I think it could be simpler, and I like the links. But as an example, we're actually recording Ann's presentation today, and we're going to have a special link on the website. Look at our engagement plan going forward. So we are trying to come up with initiatives, because we get it. There's tons of work being done, and it doesn't seem to be getting out to all of our stakeholders. So we will come up, and we'll start sending it to the board too. I just realized we could send you that one pager right now. Look, these are our recent engagements.
Yeah, I think the message is, we want to get on the offensive about this, and we have a really good story to tell, and we just want to start telling it in simple terms to our membership. This morning was a perfect example. We have members of Unite Here concerned about a specific issue, which gets a lot of exposure, but all of the work that's being done behind the scenes, that's recognized across the globe in corporate boardrooms all across the world, because of the work that the staff's doing per the direction of this committee, isn't getting that type of exposure. So we just want to do that. So I don't want to derail what this presentation's about. So we have it on the information request. I'm certain the staff knows what we're looking for. So back to you, Ann. Thanks.
Perfect. Okay, yeah, we're happy to do that. So I'm on IMD 74. I'll just sort of go over the highlights, because I know you all have had the opportunity to read it. And then I can answer any questions, and as I say, in closed session, we can talk a little bit more about some of the specific companies. So one of the things I want to highlight is, for the upcoming year, we kind of have our set issues of, comp. As you know, we're spending a lot of time with the pharma company, some environmental issues, as well as continued on diversity and the other. But that also doesn't always reflect that a lot of times we have to respond to sort of incomings or something that can happen during the year that then also we add to our list. An example this past year was Wells Fargo. Because of what went on there, we spent a great deal of time engaging with Wells Fargo and talking to them about board refreshment, board oversight. So we continue to do those, because one never knows when those types of situations, fortunately or unfortunately, surface. And we, obviously, these companies are in our portfolio. So executive comp, we continue. It's a big issue with Say on Pay. People do what they're incented to do. As we saw at Wells Fargo, if you don't get the comp structure right, it can drive very bad behavior. So we continue to engage on executive compensation. You'll see on the proxy voting, we probably voted against about 20%. We try and communicate with the companies when we vote against their compensation and talk to them about what the concerns are with compensation. One of the issues that we have spent a lot of time is the use of non-GAAP financial metrics, where they sort of tweak the metrics and then do the measurement for their compensation. One of the issues that I know the controller has sent us a letter about is companies that back out legal or regulatory settlements from their compensation metrics and calculations. So they may have had, we communicated with Southern Company, who had 2 very large write-offs on some plants, and they sort of backed out that cost from when they calculated the executive compensation. So the shareholders ended up paying for it, but the executives still got their incentives as a result of the modified calculations. We have, for a long time, communicated this issue, so I want to make sure the controller's office knows this is something that staff has caught numerous times, and we continue to push companies on this, as well as the use of non-GAAP metrics, where they try to tweak them a little bit. They have to report under GAAP, but they can also report under non-GAAP. And we're very concerned about this. So we continue to communicate with companies on this. Aisha and Doug Chen have been our lead on this, and they've done a terrific job. So we will continue to work on that issue. Brian, I don't know if you want to go over some of the sustainability issues that we'll be working on. Brian and Travis have come up with our own kind of Climate 100, and I'll let him talk a little bit about that.
Yeah, so you'll see some familiar themes. We'll continue to be involved in water, energy efficiency, methane, mostly following up with companies we've engaged with in the past. But the new engagement is ours. We've titled it our TCFD Climate Change 100. Really what it is supporting the work of the Task Force on Climate Change-related Financial Disclosure. We followed their efforts for a long time. Certainly believe that their recommendations align with how we've approached climate change risk. So we thought, what can we do to, I sense that there might be some difficulty in getting corporate uptake around the recommendations. So we thought selecting some companies from our portfolio, engaging on the recommendations of the task force would be appropriate. If you look at INV 76, at the bottom of that graph, you'll see that's the recommendation of the task force around various categories, governance strategy, risk management, metrics, and targets. That'll be largely what we talk to the companies about. I think what we'll be doing is focusing on scenario analysis, sort of what carbon emissions pathways do these companies see happening? How does that translate into impacts to the company? What sort of metrics are they looking at? What sort of strategies that they're doing in terms of risk management, board oversight, governance, and then disclosure.
And this, as I mentioned before, this will complement very much the series, PRI, the multi-stakeholder group on the Climate Action 100 Plus. So it'll complement them. But we really screened, and you can see on INV 76, the screening process for the focus for the companies in our portfolio that we think are the most important to begin with on this issue.
Yeah, and as Ann said, certainly we've already looked, there is a small, I think about 25% overlap on the 20 companies that we're looking at now, and the broader set, this other Climate Action 100, which is the PRI, CDP, Series INCR related effort, will certainly look to align with what they're doing, and I would imagine there's probably going to be some folding over of efforts going forward.
Yep.
Ms. Paquin, I see you dialed in. Did you want to?
Oh, thank you, Mr. Chair. And I appreciate the explanation. I know that the Climate Action 100, their list has been a little bit delayed, so I appreciate you reaching out to that and thinking about how to best fold it in with the TCFD. So I think that sounds great. And I had another question back on executive compensation. I don't know if this is a time to ask. Okay. So thank you for the explanation, Ms. Sheehan. And as Controller Yee noted, she is concerned about the non-GAAP financial accounting. And I was wondering, is there a coalition of investors that you're working with to focus on this issue?
So this is kind of a complicated issue because you have to dig very deep into most of these compensation plans to sort of find this, and there's not uniformity across disclosure when it comes to non-GAAP metrics. So one of the ways that we're tackling this is through, engagement with companies on what measures they're using, what exactly are the non-GAAP metrics. And then the other part of this is the clawback issue, because with some of these litigation or regulatory fines that the companies are subject to, making sure that the executives, when those violations occurred, that they're held accountable. So we're also talking to companies a lot about having more robust clawback policies as well.
There isn't a set kind of exec comp coalition, but the group, and I'll touch on it, we have joined this opioid group that's looking at pharmaceutical companies, and compensation is an issue for that group. So there are certain coalitions that we work with on certain issues, but frequently when we see a problem at a company, we did work with some other companies, as you said, other investors, like with Southern Company that I mentioned, As You Sow, in the 50/50 climate, whatever, anyway, that group, they were with us on the Southern Company engagement. So sometimes it is one-off coalitions, I would say, that are sort of come together when a number of us have concerns about a certain compensation practice at a certain company.
And we're tough graders. We hold companies, to a pretty high standard. So we vote against more companies than some of our peers.
And because of that, a lot of them will call us on these coalitions because they know we'll engage with on compensation. So.
Thank you. And just one follow-up question. So it sounds like it is difficult to identify these companies and how they're doing it unless you go in and really have a deep engagement with them, or they end up in the headlines for egregious behavior. But is there anything that the proxy access companies can help to do to flag some of these companies ahead of time?
Well, the proxy advisors do flag them, and, when they come up on their vote, on their, make their recommendations on the voting, and some of our comp consultants also flag them. The SEC has actually issued guidance on the use of non-GAAP measures a couple of years ago, and they are sending letters to companies on the use of non-GAAP measures. There was actually, we were talking about this yesterday, there was a big article about GE, who has used 4 or 5 different non-GAAP measures as they report on types of things. So I think there is much more attention to this issue. But as Aisha said, it's almost like a ground war in terms of this. And with the number of companies that we have and that we're voting on, but what we try and do is the high-profile ones and then publicize those, because that sort of signal can send a message across the marketplace as to what investors are not really going to be tolerating anymore.
Because the other issue is that there are, the SEC, there are requirements in terms of financial statements and doing some coordination between GAAP and non-GAAP figures. That same requirement doesn't necessarily apply to the proxy statement. And so it's getting better disclosure inside the proxy statement about those metrics.
Okay, thank you.
Okay.
I know Mr. Rice was on his piece about the sustainability issues with the other climate risk, and I think it's a nice approach that the 100 companies, 20 a year for the next 5 years, really targeted specific areas that you'll be looking at. That's great. Were there other areas of the report that you wanted to cover? And then for the rest of the team, just being mindful of our time, we could kind of summarize where we're at.
No, I think I've touched on all of the important sustainability issues we'll be engaging on this year.
Yeah. And the specifics are in the report, so if there are any questions. We talked about the healthcare industry and the pharma interest, the issue on the opioid crisis. So we are joining with a coalition on that. It was just announced, this week in terms of some of that, and specifically a couple of companies in terms of oversight. Continue to work on diversity on corporate boards, as well as human capital management. Ms. Vargas, I know, had challenged us a couple of years ago to add sort of the diversity inside the workforce, human capital. So we have joined a coalition on that, help to file a petition at the SEC asking for a little more disclosure on human capital, since companies say their human capital is one of their best assets. So we'd like to learn a little bit more about specifics on that. You've got the specifics in here in terms of the diversity, and there again, we can talk in closed session about that. And I think I talked a little bit about Iran, Sudan, continue, that's an ongoing issue, is the 21 risk factors. We are not, as you say, doing our majority vote. We've actually made great progress over the last few years of getting over 500 companies to adopt a majority voting standard. So we're going to take a little bit of a breather. But as we engage with companies and they do not have a majority voting standard, we bring it up in that. So we always look at their basic governance issues. So in light of the time constraint, why don't I close it there and see if anybody has any questions?
Ms. Higa, and then Ms. Glazer-Hedrick. Ms. Higa.
Okay. Thank you. Thank you to all of you, Ann, and your staff for the great work that you continue to do. On the diversity issues, I know we've for years now have been a leader in focusing on corporate board diversity, and our review of going a little bit deeper and looking at human capital initiatives is something we've done more recently. In your report, you talk about looking at ways to better track, measure, and disclose initiatives on managing the human capital, I think, as a company resource. And I just wondered, when we first started talking about this, when you look at a corporate board diversity, that may be easier to measure because you can look at the number of slots and see what the ratios are like. But in terms of looking at what companies are doing to manage their pipeline and be more inclusive in the entire company, that's harder to measure. And so I just wondered if you could comment on how you think we make progress.
Yeah, and that's another one where it's sort of a ground game in terms of talking to companies. But one of the reasons we want a little more disclosure on the human capital side, because the only thing they're required under securities law to disclose is the number of employees. But there has been an enhanced focus by investors on, gender pay equity, the the makeup of the workforce, those types of things. So we are encouraging companies to report more so that we can see, we don't have to go just do a discussion with them and then we get the information. But it is it's definitely kind of an emerging area where I think companies are hearing human capital is becoming a big focus. Because in this day and age, especially in the information technology, the intellectual capital of the workers is really what their best asset is for many of them. So what are they doing about that? And then also on the diversity side, what are they doing to develop programs to promote diversity? The gender pay issue, I think you all have been, you've seen in the news in terms of that. We've seen a number of shareholder proposals this year and engagements with companies on that issue. So it's really a multi-pronged approach to try and push companies on this.
Can I ask a follow-up question?
Of course.
Do you think that with the engagement with the companies, there may be more companies that would disclose that kind of information voluntarily?
Well, we're seeing more that are doing some because I think they see the benefit of that disclosure, and it's not necessarily, confidential information, but it's not just to investors, but to their stakeholders and to their employees. Many of them have a good story to tell. And when we talk to them, like, you have a great story to tell about what you're doing. Why aren't you doing that? So I think they are beginning to see the benefit of that.
Thank you, George. Ms. Glazer-Hedrick?
Thank you, Anne, to yourself and your staff. The Treasurer appreciates all the efforts that CalSTRS has made with regard to corporate board diversity. And he's actually really interested and engaged in finding out how the engagement efforts actually turn out this year. With regard to discussions after this proxy season regarding any changes that might be made in the corporate governance policies for next year, he'd like to have a robust discussion regarding kind of how CalSTRS and the board can further promote diversity on boards, potentially by being more objective about defining what we feel diversity is, and then being more objective about, the repercussions if after engagement there is a lack of action or inaction. But the Treasurer looks forward to having those discussions. Thank you.
Thanks. And one of the things that you'll see on our proxy voting guideline update is to strengthen that provision. And the Treasurer's office and I have spoken about this. One of our guidelines that you all adopted last year was that if after engagement with a company about their diversity, they don't make progress, then we will begin to vote against the Nominating Governance Committee. And in closed session, you'll see we've identified a number of companies that we have engaged and they have made no movement. So we intend to communicate with them that we're going to vote against their Nominating Governance Committee for lack of action on that, because it does send a strong signal. There are some investors who just straight out vote against companies that don't have diversity. It's always been our approach to engage first, let them know, we want you to do something about this, give them the opportunity, and then explain that actions or inactions have consequences if they don't do something about it. So we're happy to follow up with you on the votes this year.
Thank you, Ms. Sheehan, Ms. Mastagi, and Mr. Rice for your continued excellent work, and look forward to our conversation in closed session. Thank you.
Thanks.
Just for a time check, I think we'll take.
It is an action item?
Oh, I saw that, but then, yeah, okay, so the action is, yeah.
Move it. Second.
Okay, it's been moved and properly seconded to adopt the corporate governance engagement plan for this year without objection. Okay, it's been approved, thank you. So for a time check, I think we'll take the CIO report and then we'll break for lunch, which means we have quite a few items for the afternoon. But we'll go to Chris for the CIO report, and then we'll break for lunch. Chris.
Thank you, Harry. A couple things I want to highlight. Tomorrow, we're expecting the president to announce his selection for new Fed chair. The current thinking is that it's going to be Jerome Powell. Sharon had asked that I give you a little background on that. He's actually been on the Federal Reserve Board since May of 2012. He was actually appointed by President Obama. He hasn't ever dissented from a FOMC decision. So he's viewed by Wall Street as kind of being a safe appointment and continuing on kind of the the continuity candidate. That's the quote that we're hearing. He's been a big supporter of Yellen in his public comments. He doesn't rely on rules, which has been a big discussion about the Taylor rule and whether the Fed should be more rigid in what it does. Couple of things to note. He actually has deep connections with the financial services industry. He was a partner at the Carlyle Group, a private equity firm we did business with in the 90s and early 2000s. He'd be the first Fed chair ever without an economics degree. He went to Princeton and studied law and has been in investment banking. But overall, Wall Street's view is this will be a pretty mild appointment, and I don't expect a lot of reaction out of the street, more probably, if anything, a relief rally. But I am not going on record as making any predictions about what this president will or won't do. Within the portfolio, I want to highlight the growth. We hit an all-time high at September 30 of $215 billion. October, thankfully, it's over, was not as scary a month as many expect. Several times during October, we hit a level of $219 billion. So the portfolios continue to grow nicely. We are actually up almost $10 billion on this fiscal year to date, which is very fortunate, just out of the blocks and on the start. So, and as I mentioned, 2017 from a calendar year standpoint will look very good. Here's the asset allocation back in September, very similar to where we are at the end of October. We're, as you can see in the side of the chart, in terms of where we are relative to our targets, very much in a baseball analogy, standing on the base. We're not trying to take a lead or stretch. We're staying very close to home and within all of our allocation targets. This is a picture of the U.S. equity market so far this fiscal year. And I think it's surprising to people. The summer was pretty flat. We actually traded sideways, but since about mid-August, the market has been significantly stronger and continued to rise. And I think that pause to refresh was actually fairly healthy for the market. As we've discussed, it's a bit overbought. Here it is on this calendar year, so 2017. And you can see by the rising bottom line there, it's a pretty steep slope. And the market really has had a very powerful year. I think the notes I saw is we're up almost 25% in a year, which is well ahead of its normal pace. Here's stepping back a bunch. Here's the U.S. equity market over the last 4 years. So taking us back to the beginning of 2012. And you can see that we did, as we discussed earlier in the cost report, 2014, 2015 were a pretty sideways time period. But now once we got into 16, we've really had a nice strong march back up. Overall, though, I would say the market, you can see you've got a rally, then a sideways trend that I mentioned, and then this new renewed rally. Doesn't mean this will continue on forever. As we've said, we expect this to run out of steam, but it has continued to be a strong market. This is a longer-term picture of the U.S. market. So the first half of the graph, you can see the 99 run-up, and then obviously the 2001 and 2 internet bubble burst and the recession, the 08 crisis, and really you can see from 09 on how powerful this equity market has been. And how much longer it has lasted than others. So the low was back in 2009, and you're now spanning, coming up on 8 years to almost 10 years of a bull market, which is very unusual. It doesn't usually last this long. But you can also notice, when we have recessions, they are very steep. Those two are very profound, so I wouldn't expect the market to always drop that dramatically. But this is a very long-run bull market so far, dating back to that market low. Non-U.S. market, very similar graph, 2017. It has been much more of a positive slope for non-U.S. stocks. It has been the year definitely for non-U.S. over U.S. And here we look back over the last 5 years again. You can see that non-U.S. really traded sideways for an extended period of time of really 2013 to 2016 of going nowhere. And the U.S. market was outperforming during that time period. But now we've had this nice rally in the last year. So the risks obviously remain. I put North Korea at the top without question, and the U.S. president, I should probably just change that to tweets from the president. I think there have been some good articles about how the people around him are very stable, but his particular actions cause a lot of concern. The rest of the list hasn't changed dramatically. There is a concern about a collapse and the risk that we're going to see problems in trade, problems across the region with global nationalism. And I will share some articles on that. So the positives remain the same.
Chris, JCPOA.
You know, I think, I'm trying to remember, I wrote that a while ago. That's a misprint. Yeah, the nuclear agreement. Joint, yes, thank you. I apologize. I wrote this back in September.
Comprehensive plan of action.
Comprehensive plan of action. So a couple of key things are on the positive side. Right now, people are looking on the very positive outlook for consumer for the holiday sales. So that will be interesting to watch because that is very important to the retail industry. And as I've said before, U.S. GDP, 70% of it is the U.S. consumer. So retail matters. Now, obviously, bricks and mortar doesn't matter as much as it did, but retail matters. So more yellow signs than positive, but I think we are in a mode for lower for longer. It's tough to say how long the U.S. equity market will continue to rally without a pause to refresh, but we'll take it. Then I wanted to highlight, we did have a reception for small and emerging managers. CalPERS has a full day event, and so we've been hosting for this, our second year of hosting a reception the night before. We had over 100 attendees participate in our cafe area. We actually sent a survey out, and I just want to read a couple of the comments we got back. All the comments we got back were very positive, that it was open and inviting, open and transparent, friendly and approachable. Some of the key takeaways were that somebody said it was great to know who the key people are and the gatekeepers are, and they appreciated the opportunity to connect with the STIRS staff and to learn more about our staff directly. So very well received, went very positive, and I think overall we're going to keep doing it again, but it is part of that outreach effort to small and emerging managers to let them know we're here and how to reach us. Every single asset class is representative. We spent a lot of time with them and talked to them about how they can walk right up to Mike or June or anybody and talk to them and find out how they can get access to that asset class. A couple of key engagement issues we wanted to highlight for you. Ann ran through them quickly, but on the Dakota Access Pipeline, they've continued to engage with that. We're hearing that quite a few other of our multinational friends are picking this up, particularly Norway as a major issue. So there is this concern because not just within the USA, but across particularly North America and the globe, the concern about indigenous people's rights. And so we're very active in that. And one last thing before we go to lunch, I want to highlight that Michelle Cunningham has announced her retirement. Michelle's been with us for 27 years. She was the very first investment officer ever hired. So you have to realize we were managed by CalPERS up until about 1982. That's when they broke out the STIRS portfolio for the first time. So I always say the investment office isn't that old. And the investment office was initially staffed with contractors. So the directors and the CIO were all separate contract people that didn't work for the state. And Michelle was actually the first investment staff person ever hired. So I'm going to ask Michelle to stand up because I want to recognize her. You know, she shifted to from our investment officer to director of fixed income. Then she moved up, obviously, in 2012 to my deputy CIO. Has been an invaluable person my entire career, been by my side and supporting. 35-year investment career, and as I said, I think absolutely the heart and soul of the investment office. So thank you, Michelle, and congratulations. No, you have to stand up. Go ahead. I think the state treasurer has something they want to say.
Sorry.
There you go.
Thank you.
You're welcome.
For those of you who don't know, although Michelle spent 27 years at Cal STRS, she actually came from the executive office at the treasurer's office. And so on behalf of the state treasurer, I have a resolution he prepared for you and just wanted to honor your service to the Cal STRS members and just to the members of California. So thank you.
Congratulations, you're very much welcome. Thank you.
So thank you very much, and again, thank you to Michelle. She, I really mean it. I think the whole staff realizes she's sort of investment officer #1, and will always stay #1 in our hearts. So, thank you, and thank you to Michelle.
All right, thanks, Ms. Dillman. So we'll break for lunch, and we'll come back at 1 o'clock sharp, okay? Thanks.